For decades, a savings account has been the default place people store their money. It feels safe, familiar, and easy to access whenever it's needed. But there's one problem. While your money sits there, inflation is often working against you. Even when your balance grows, its purchasing power may be growing much more slowly than you think. That's why many investors look beyond traditional savings accounts and into assets that have the potential to generate higher long-term returns. Today, we will talk about 7 investments that beat your savings account every time. So before we get started, make sure to hit that like button, also subscribe to my channel. 7. Savings accounts are great for safety, not wealth. Most people are taught from a young age that putting money into a savings account is the smart thing to do. And to be fair, savings accounts serve an important purpose. They provide security, easy access to cash, and protection against unexpected emergencies. If your car breaks down, you lose your job, or a major expense suddenly appears, having money in a savings account can prevent a financial disaster. But there is a problem that many people do not fully understand. Savings accounts are designed to preserve money, not build significant wealth. While your balance may slowly increase through interest payments, the growth is often relatively small. Meanwhile, the cost of living continues to rise. Groceries become more expensive, housing costs increase, and everyday expenses gradually climb higher over time. 6. Broad market index funds. One of the most popular investments among long-term investors is the broad market index fund. While the name may sound complicated, the concept is actually very simple. Instead of trying to choose a few individual companies and hoping they become successful, an index fund allows you to own small pieces of hundreds or even thousands of companies at the same time. This approach offers an important advantage: diversification. If one company struggles, the entire investment is not necessarily damaged because many other companies remain part of the fund. Rather than betting on a single winner, you are participating in the growth of a large portion of the economy. Historically, broad market index funds have delivered significantly higher returns than traditional savings accounts over long periods. Of course, there are no guarantees, and prices can rise and fall in the short term. Some years may be excellent, while others may be disappointing. However, many investors prefer this strategy because it removes much of the guesswork involved in selecting individual stocks. 5. Dividend-paying stocks. Another investment that often outperforms savings accounts is dividend-paying stocks. When you buy shares in certain companies, those businesses may share a portion of their profits with shareholders through regular dividend payments. Think about it this way. A savings account pays interest because the bank is holding your money. Dividend-paying stocks can provide income because you own part of a real business that is generating profits. One of the attractive features of dividend stocks is that investors may benefit in 2 different ways. First, they receive dividend payments. Second, the value of the stock itself may increase over time. This combination can create a powerful wealth-building strategy. Many well-established companies have paid dividends for decades and have even increased those payments over time. As businesses grow, shareholders may receive larger dividend checks while also benefiting from long-term appreciation. 4. Real estate investments. Real estate has created wealth for generations. Long before stock markets became widely accessible, people were building fortunes through property ownership. The reason real estate remains popular is simple. It offers multiple opportunities to build wealth at the same time. Property values may increase over time. Rental income can generate monthly cash flow. In some situations, owners can also benefit from tax advantages. Imagine owning a property that generates rental income every month. While tenants are paying rent, the property itself may also be increasing in value. Over many years, This combination can create substantial financial growth. Of course, real estate is not a perfect investment. Properties require maintenance, repairs, and management. Markets can rise and fall. Unexpected expenses can appear. But despite these challenges, real estate has historically been one of the most effective wealth-building tools available. 3. Investing in your skills. This investment is often overlooked because it does not look like a traditional investment. There are no stock charts, property listings, or account balances involved. Yet it may be one of the most profitable investments a person can ever make. Investing in your skills can dramatically increase your earning potential. Think about the difference between someone earning $30,000 per year and someone earning $80,000 per year. In many cases, the difference comes down to valuable skills. Sales, programming, marketing, copywriting, design, management, communication, and technical expertise can all create opportunities for higher income. A course, certification, training program, educational book, or coaching session may cost money today, but the knowledge gained can continue generating returns for years. 2. Building a small business. Few investments offer the potential rewards of a successful business. While starting a business involves risk, it also provides opportunities that are difficult to find elsewhere. A business allows you to create value, solve problems, and generate income directly from customers. Unlike a savings account that pays a fixed amount of interest, a business has the potential to grow dramatically if it serves people well. Many of today's largest companies started as very small operations. They began with a simple idea, a handful of customers, and a commitment to continuous improvement. Even a small side business can create additional income streams that help accelerate wealth building. Whether it involves consulting, freelancing, content creation, digital products, e-commerce, or local services. Business ownership allows people to take greater control of their financial future. 1. The best investment is the one that keeps growing. The biggest lesson is that wealth is not built by simply storing money. Wealth is built by putting money into assets that have the potential to grow, produce income, and create future opportunities. Savings accounts absolutely serve an important purpose. Everyone should have financial reserves available for emergencies and unexpected expenses. But when it comes to long-term wealth creation, growth matters. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.